Let's welcome on board Vinit Bolinjkar as well. He's the head of research at Venture Securities. Vinit, let's start with the real estate sector itself. Any names that make it to your favorite list?
No, I have a small cap stock called DB Realty, which I believe can do well. It's a high risk, high gain kind of story. But I believe that in this sector, all the corporate governance issues are out. Prestige has stepped in. The debt situation has eased, and they've got significant amount of projects which are coming on stream. The cash flow of which should start flowing. So if one were to invest in this stock for a slightly longer tenure of 3 to 4 years, one can, get very, very good returns out here, which can be sort of a multi-bagger in the making. But I would still like to reassert that this is a high risk, high gain kind of a story, and that's that.
Reads also.
Right. Okay, that's the take coming in on realty. But Vinit, just wondering, what are you hoping to hear from the rest of the IT pack, and especially some of the mid-cap IT names after the commentary that we've heard from both TCS as well as Infosys?
So, we have spoken in our multiple shows over the last few weeks that we continue to be bearish on the IT sector. We believe that the pricing power is a challenge, and volume growth is also being a challenge. So we believe that, there could be a slowdown for the next 2, possibly 3 quarters. So until that situation does not, we sail through it with tweaking of the business model, controlling costs, I think it will be very difficult for the companies to kind of show any kind of growth. So in line of that fact, we remain bearish on this sector and would recommend investors to buy into more domestic stories. We like consumer and autos, where we believe that the growth is just picking up in the retail segment, and that is expected to drive the index forward.
Names in autos and consumption specifically.
So in consumption, we would go with stocks like HUl, Nestle. Nestle remains our top pick. We like Gillette. It's a stock which is not in kind of favor in the market, but I think they've done substantial work to try to get their mojo back, and be seeing periods of market share gains coming through. Especially in the auto sector, we like Eicher Motors. We believe both the Royal Enfield platform as well as the VECV, the CV subsidiary, are doing extremely well, and with Royal Enfield looking to launch 28 new products in the next 5 years, I think the going is good. They're getting market share gains in North India. Globally also, they are well set with almost 150 plus touch points from 10 to 12 touch points in 2016. So they've come a really long way. And in terms of profitability, distribution, product appeal, and lack of competition, makes this a very, very strong buy in our opinion. And I think that 30% growth over the next 2 years is a very, very strong possibility.
Right. Okay, let's get in some mid-cap ideas as well. Kunal, what's on your list?
So, actually, looking at the market texture, would suggest a couple of calls over here. The first one, which I would be suggesting, would be a buy on DV Slab. I think that stock looks extremely attractive. We've seen that the stock has confirmed a breakout of a higher degree chart from being a breakout earlier on a smaller degree time frame. So, would suggest a buy. Would revise the targets higher to 3,400 from my earlier given targets of 3,300, and stop loss could be traded higher to 3,155. The second would be a buy on Poonawalla FinCorp, a stock which we discussed in the morning. So looks on Chartbusters, looks attractive for a fresh breakout. The targets which are revised on the higher side to 325 for Poonawalla FinCorp, and stop loss is traded to 296.
What about you, Naresh, in terms of the closing trades that you are executing?
So looking at tires as a sector, which is looking interesting, and that is where Apollo Tires comes into play. The stock, after making a huge breakout above the 2018 highs, consolidated for the last 3 months. And over the last 4 or 5 sessions, the high was around 330. Today it has crossed. The all-time highs for the stock are around 340. So clearly leadership possibility here, wherein it could make a new move towards an all-time high. So expecting a move towards 370 to 400 in the medium term. So that's a buy on Apollo Tires for the short.
Right. Okay. On that note, we're going to take a very quick break. We haven't seen much of an improvement really in where the index is. Though 17,700 is back for the Nifty futures, we're down still about 50 odd points. Pound continues to beat the story today. And let's take it across with Anand Tandon as well, while we still have Vinit Bolinjkar too on the show. Okay, we will get back to him later on. But Anand, if I could just ask you, afternoon firstly, as to what is the expectation now from the rest of the IT pack? Do you think there's anyone within the large or the mid-cap IT arena which can deliver better than what the market expectation is, which after Infosys is at rank low?
Well, from a broad brush perspective, I would think not. It's very difficult for large companies to be able to create any small significant niche which will be able to move the needle overall. So I think for the large companies, by and large, I think you've already got an indication of where the earnings for the near term are headed. The smaller companies, there may be some which may be, for example, focused on travel or some of the niches where it may be possible that a business is doing very well, and therefore they may continue to be reporting good numbers. But it is very unlikely that it can be something that can outlast an overall downswing in terms of the valuations that the sector is going through. So by and large, for now, at least for the next few months, I would argue that IT will continue to remain subdued. We've seen a decent run in the last few weeks preceding the results, and now that has been pretty much given up, and I think it will remain in that kind of range with a slight negative bias till there is greater clarity in terms of where the global economy is heading.
Okay, so that's the update coming in as far as how you should expect the numbers to come for the mid-cap IT space or the other of the IT names as well. But Anand, your take as far as some of these auto ancillaries are concerned. Recently, we have seen, marquee names get into the likes of Uniparts, Precision Camshafts. You also have JBM Auto, which is sitting at a 52-week high. Then Sundaram Fasteners, etc. These ancillary names, etc. have been doing quite well. Do you think this is a better way to play the consumption and the auto uptick?
Well, many of them are not very expensive at this stage. So perhaps you could look at it, but I frankly prefer to look at the OEMs directly. So the argument, for example, for having being in the auto ancillary space is that you should be looking at export markets, so you will be able to get a minimum basic presence and profitability from the domestic market, and then you export some, and you have got the world as your markets. The reality is that the world market is nothing exciting right now. So in fact, you've seen Bharat Forge, for example, again having to suffer because the order books are looking rather weak in the US market and so on. So without the international market, you are only looking at a domestic play. And I think at this stage, a domestic play in terms of the OEMs themselves is reasonably well positioned. So why would you want to go into a supplier where they will be the first ones to get squeezed out whenever there is a downturn, and they will not get the full part of the upside whenever there is an upcycle in the demand. So I still think that if you have to play auto, you are better off probably just buying the front-end auto companies directly.
Right. Anand, just wondering from an overall market construct perspective, whether you are a buyer, anything that you may have bought afresh in the last month or so?
So, near term, the market had got a little over, and therefore there was a case to be made for it to go up. I think, given the fact that the incremental news flow has been positive, with the RBI definitely going on pause, and it's very unlikely that having gone into a pause mode, you'll suddenly start raising interest rates again. The biggest factor, which was the fact that credit will become expensive and interest rates will rise, and therefore valuations have to fall further, at least from the domestic market perspective, has been kind of taken off the table somewhat, which essentially means that you are now looking at what's going to happen globally. So in a market where international prices are interest rates are likely to continue to head higher, and the US Fed is likely to continue to squeeze the balance sheet, there will be some pressure on equities, but not as much as we had till the RBI action came through. So the near-term outlook for India is a little more positive than it was, say, a month ago. And that would also be, you can also see that in the price action that you are seeing, that the stocks don't particularly fall below a point. The challenge, however, is identifying sectors which are relatively cheap, because most of the sectors where there is high earnings visibility have already been doing very well. So, for example, banking, which is going to be the largest driver for earnings for the current year, has already done quite well and is continuing to do well. I think there may be still some more upside because valuations are not that challenging. But otherwise, it's a little difficult to find sectors as a whole
Right.
in terms of where you can get put new money.
Sure. Sorry, Anand, to interject there, but an important news flash at the bottom of your screen, wherein the entire, report regarding the change in the capital gains tax has been, regarded as baseless from the finance ministry sources. Now, this is what my, our reporters are picking up from the finance ministry, that they are saying that there is no discussion on capital gains tax in the finance ministry at this point of time. The news which has been, reported by some of the media agencies is baseless at this point of time. There is no confirmation on any such news from the finance ministry. So even the discussion doesn't seem to be on, and this is very much in conjunction with what the finance minister had told us earlier, because she pointed out that the entire ministry and the government right now is looking at bringing in more continuity when it comes to the tax law. They want to get away from all the policy ambiguity which is there, and are making sure that the FIIs as well as the Indian investors have that clarity with respect to what kind of compliances are needed, what kind of tax structures, etc. has been put in place, because historically that was a worry point with a lot of foreign investors as to what's happening. In fact, I think Nikunj is joining us because he's had this conversation with the finance minister as well. Nikunj, your take? The reports are suggesting this is completely baseless.
Well, with all due respect to a media organization which is claiming that there could be a tinkering in the tax structure, I think this is more like a bolt out of the blue, and it is not completely substantiated. What we understand from our finance ministry sources is that as of now there is no proposal to change any kind of taxes. One. B, we must also appreciate and recognize that next year there is going to be vote on account. And since there is going to be vote on account, any big incremental changes to the direct tax structure is unlikely to happen. C, if one really takes the clock back, and if I may just politely remind our viewers about what the finance minister essentially had to indicate to us when we specifically asked the finance minister and the honorable finance minister on why was there no changes which were done on the capital gains tax. She said, look, the capital gain taxes were changed in 2018 and it is far too early to make any kind of changes. Now, why there is so much of speculation? The reason why there is so much of speculation is because in the finance bill, the total indexation for debt mutual fund was changed. And while the government in a sense has indicated that, look, the direct tax reforms is something which they are working on, and the fact that a lot of asset classes now are coming under the same tax bracket, why should equity get some kind of a preferential treatment? So as of now, what we understand from a last communication from the finance minister and from the finance ministry, that there is no proposal whatsoever. The minute this news came out, there was a bit of a speculation in the market, and the markets came down. But looking at the context here, B, looking at the backdrop here, and what our sources are telling us, that we can confirm that there is no immediate plan to change the capital gain tax structure. The fact that direct tax reforms would be at play, this has been the stated objective of the government. They've been working towards that. But as of now, I go back to that same point. Our sources are telling us that there is no plan whatsoever to change the structure on capital gains immediately. Anisha?
It may not even, Nikunj, happen outside the purview of budget, right? If at all there has to be any change, it will happen in the budget, I'm guessing.
Yes, Aisha. We've historically seen that the big tax changes now happen in the budget, especially when it comes to direct taxes. GST and indirect taxes is something which do not need the budget forum, but direct taxes, whether it is personal income tax, with the exception of one big corporate tax cut, Aisha, which happened in 2019 because that was need of the hour, direct tax changes are normally not changed midway. B, there is no immediate need to bring back capital gains taxes because in last 12 to 18 months, it's not that equity markets have just gone one way. And C, I just take the conversation back. In the month of Feb, when we seeked our opinion from the finance minister, he said that 2018, the tax structure for long term was changed. It's too early because there has been a patch of COVID and there has been a patch of unusual drop and unusual recovery. It's too early for the government now to take any kind of a view based on just 3.5 years of data. I know the speculation especially after the finance bill was tabled. But I think we cannot link the change in capital gains taxes versus what has come in the finance bill for debt mutual funds. We should not confuse and link them.
Okay, Nikunj, so thank you so much for bringing in that clarity as well, and your take as to what we should make of these reports doing the round. But let's listen into the reply coming in from the finance minister when Nikunj posed the question as to what government's thought process was regarding the entire capital gains structure as well.
The fact that there was no change in the capital gain structure this time, can we assume that this is some kind of an endorsement by the government that equity will get a preferential treatment?
We don't want to keep changing too many things in too few short time. Capital gains tax, the last amendment was probably in 16 or 18?
2018.
18. And subsequent to that, ideally even 3 full years of not even gotten completed. So do you want to change the policy immediately? No, you would want to see how it works out.
Since we have Anand Tandon with us, let's take his opinion as well. Anand, what do you make of the reaction coming into the market? Any negative news, and it's been used as an excuse to sell into the markets?
Obviously, if you make changes or if the market thinks that there is going to be change in capital gains, it has to adjust accordingly. As it is, the changes despite the protestations of the minister are too many and too frequent. So, and clearly the government, this particular government doesn't care too much about capital markets in general. So, from that perspective, I would argue that it is not. It wasn't as if the reaction was too severe if you actually had any apprehension that there will be change in taxes.
Right. Okay, that's the take coming in on, this knee-jerk reaction that you're seeing by the markets, but just at the cost of even repeating ourselves, the news in some of the media agencies on this tax tweak is baseless, is what our finance ministry sources are telling us, and also saying that there has been no discussion on capital gains tax in the finance ministry, no confirmation of any such news coming in from the finance ministry. So completely redundant and baseless is what the finance ministry sources are calling it. For the market, we've lifted off definitely from the session lows, but just skirting around that 17,700 odd level. Kunal, you think we'll make an attempt at 17,800, which we decisively managed to climb up last week? Or do you think ahead of the key earnings like Reliance, ICICI Bank over the weekend, will be much subdued for the rest of the week?
I think we could be much more subdued for the markets, and I think that's what Aisha, over the last 2 days, the markets or the indices are suggesting, that they are not in a hurry to try and break out of the pre-resistances. So the market mood in terms of the in terms of the sectors is still getting into that slow and gradual upward tick. So for example, you've seen Bank Nifty moving up higher over the last many days. Then now, for example, today, last week you had the real estate stocks which did pretty well. Sugar stocks did exceptionally well. Chemical stocks, they had their own share of upward trend. Today you have the real estate pack, the pharma stocks which are emerging. So there is no strong sector trend which has been consistent for the markets in the last 1 week. It's more of a churn which has happened for the indices. And I think that's one of the reasons why I would believe that we would probably consolidate more.
Kunal, also give us your trade that you're executing at this point of time. Any closing trades?
6537.
So, Anisha, that would be on AB Capital. That's a stock which I think looks very attractive on the charts. It's confirmed a breakout about that 160 plus mark. So, looks very attractive on the short-term time frame. And that's the stock which I would look to buy as well as recommend to clients.
What's the BTSC trade that you are spotting at this point of time?
So that would be a buy on Apollo Tires. That's a stock just trying to break out in the near term. Last 3-4 days of range broken out. Stop loss at 327 and target price of 340. Second is a buy on BHEL, which has made a strong comeback today and a good momentum move. I think there should be some more follow up for the next few sessions. The stop loss at 74 and a target price of 78.
Okay, so that